What's up, everybody? Nate here. So Papa Powell and the Federal Reserve are once again flip-flopping on inflation. Except for this time, it's a little bit different. They're actually starting to tell us how they really feel about inflation in the United States. In a recent meeting, Federal Reserve Chairman Jerome Powell said that in his opinion, inflation is much too high right now. Yeah, you think? And Jerome Powell said that he and the Federal Reserve widely underestimated inflation and how bad it would get in 2022. Yeah, Jerome, we know. And he also reiterated from the Fed's meeting last week that the Federal Reserve is going to do whatever it takes to lower inflation in the United States this year. And in his mind, that could mean raising rates even more and even higher in 2022. So today, I want to talk all about what Jerome Powell and the Federal Reserve is now saying about inflation and how they plan to tackle it in 2022. We'll also talk about how they basically are now admitting that they were wrong all along on inflation and what that is all going to mean for the future of our economy. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. And now let's talk all about Jerome Powell, the Federal Reserve, and how they're flip-flopping on inflation right now. Okay, so I want to start with a few quotes from Jerome Powell himself. Jerome Powell just had a meeting about inflation, and he basically said, quote, "The labor market is very strong and inflation is much too high. We will take the necessary steps to ensure a return to price stability. In particular, if we conclude that it is appropriate to move aggressively by raising the federal funds rate by more than 25 basis points at a meeting or meetings, we will do so. And if we determine that we need to tighten beyond common measures of neutral and into a more restrictive stance, we will do that as well." Okay, so something tells me that last part of the statement is not going to happen. But basically what he's saying here is that if the Federal Reserve believes that they need to get aggressive with inflation, then they will. And if that means over 25 basis point rate hikes, then they'll do that too. In addition, Jerome Powell said, quote, "It continues to seem likely that hoped for supply side healing will come over time as the world ultimately settles into some new normal. But the timing and scope of that relief are highly uncertain. In the meantime, as we set policy, we will be looking to actual progress on these issues and not assuming significant near-term supply side relief." Okay, so a little backstory here. In 2021, when all of this inflation was really starting to hit the mainstream and really starting to build, Federal Reserve Chairman Jerome Powell, Secretary of the Treasury Janet Yellen, the President of the United States, and pretty much everyone else in the federal government was saying that all of this inflation we're experiencing is completely transitory. What that meant is the inflation is going to go away. It's completely temporary, and once all of our supply chain issues are resolved, then this inflation problem will also be resolved. They kept saying this over and over and over again until about November or December when they basically said, we screwed up. And the reason that they had to come out and say that maybe this inflation is higher than we expected it to be at this point was because investors and experts were all in agreement that the Federal Reserve is way behind the inflation curve and they should be doing a lot more to be lowering it. But here's the thing, that was in November and December of 2021, and the Federal Reserve is just now starting to do something about inflation. This comes after a recent CPI report, which is the Consumer Price Index that basically measures how high prices are getting in the United States. And on the recent inflation report for February 2022, inflation hit a near over 40-year high of around 7.9%. And it wasn't just like it jumped up overnight. Inflation has been an issue for about a year now. I mean, realistically, inflation has been an issue for about 2 years now, when the Federal Reserve and the United States federal government started printing trillions of additional dollars in response to the pandemic. But we don't really start to see inflation pick up until the mid parts of 2021. This is because, like I said, inflation does not just happen overnight. It's the result of trillions of dollars being printed and supply chain issues. All of that is now coming back to bite us in the behind. But Jerome Powell didn't stop there. He also said, quote, "In normal times, when employment and inflation are close to our objectives, monetary policy would look through a brief burst of inflation associated with commodity price shocks. However, the risk is rising that an extended period of high inflation could push longer-term expectations uncomfortably higher, which underscores the need for the committee to move expeditiously as I have described." He also gave us a little bit more information on the Federal Reserve and its quantitative easing program. When the pandemic started, the Federal Reserve started buying hundreds of billions of dollars worth of assets on Wall Street every single month. They've started to reduce the amount that they've been buying every month since about December of 2021. However, on their most recent meeting, they didn't actually say if they were going to be stopping that program altogether anytime soon. But Jerome Powell did just admit that this program could be completely ending in May of this year. But okay, there is a lot to unpack there. So let's start with the Federal Reserve and its interest rate hikes. At its meeting last week, it said that it was going to raise its benchmark interest rates by 25 basis points, so by 0.25%. It then said that it wanted to have 6 more rate hikes in 2022 alone, followed by 3 in 2023 and 1 in 2024. Now that is super aggressive in itself because we haven't seen that many rate hikes this quickly in a very long time from the Federal Reserve. That means that it's going to be a lot harder for Americans to spend money because they're not going to be able to get a loan as easily as they could before. When the pandemic started, the Federal Reserve dropped its benchmark interest rates to 0%. They wanted to incentivize people to spend, which created demand, which also created supply and demand issues, and of course, inflation. Now they are starting to raise their interest rates again and taking away a lot of that demand. However, what Jerome Powell is saying here is that 25 basis points might not be enough to curb inflation because it's way higher than he even expected. And he said that because of supply chain issues and things happening across the world, like the Russia-Ukraine invasion, that we can't exactly set clear expectations for inflation right now. So that could mean when the Federal Reserve has their next big meeting, which is in May, we could see a 50-point increase. That's all going to depend on what inflation looks like right now. So if inflation goes way higher than 7.9%, which is what it was in February of this year, then it might be appropriate for the Federal Reserve to do that. That would really be the only way to eliminate demand very quickly in our economy. Definitely lowering inflation, but they gotta be careful not to cause a recession because if nobody can spend money, then how exactly is our economy going to function? I mean, if you remember back in March of 2020, that was the real fear, and that is why the Federal Reserve and the United States government stepped in the first place. We need spending in our economy. Now, in my opinion, many Americans spend way too much money on things they don't need. However, no spending is pretty bad too. We gotta have some spending and we gotta have some investing too, so that way assets and prices can stay pretty stable. However, it's really hard to do that right now because of supply chain issues, and we've been facing supply chain issues for about 2.5 years now. And Jerome Powell finally just admitted that supply chain issues are probably not going to go away anytime soon. This was the big thing for the Federal Reserve. They said that inflation was transitory because of supply chain issues. And of course, this was half true, right? I mean, the pandemic was causing a lot of supply chain issues. Businesses were shut down because of economic lockdowns, and countries around the world weren't sending out supply because they also had lockdowns. Even when lockdowns finally ended, it wasn't just like a switch. You couldn't just start producing way more because you wanted to. Then we ran into things like the Great Resignation and labor shortage issues. That meant that businesses, even though they want to produce more, they simply can't because they have all of these pandemic guidelines and they have lack of staffing. And don't get me wrong here, it is definitely not all boo-hoo for the big businesses. If they were to increase benefits and wages and work-life balance, then they might not be facing so many worker issues. So the big corporations and businesses are definitely partly to blame for inflation. But the supply chain problem is not really something that the United States federal government or the Federal Reserve has much control over. I mean, the United States government can't exactly tell private enterprises how to run their business. I mean, they can at a certain level, and they might need Congress to step in, but that's not something that the federal government, the president, or Congress is willing to do right now. And even if they did make some changes domestically, well, they can't exactly make changes internationally. They can't exactly tell Chinese businesses or Canadian businesses how to run their companies. So if there's lockdowns and supply chain issues, production issues all the way across the world, well, the United States is going to suffer because of that. And obviously right now we've got some big supply chain issues with the war between Russia and Ukraine, causing energy prices to go through the roof as of the last couple of weeks. And we have fresh new lockdowns in China creating even worse supply chain issues for the United States. That's all raising inflation, and Jerome Powell basically just said that that is going to continue for the foreseeable future, and they're basically just going to have to make monetary policy around that. I think that is the right move. However, I still think the Federal Reserve is way behind on inflation. I mean, a 25 basis point hike is something, but it's not enough to start curving it right now. The Fed is finally admitting that they widely underestimated how bad inflation is going to get in our economy. And we can see that as prices are going through the roof and wages are not going up nearly fast enough. Now, the Fed finally admitting that it was wrong about inflation is a great first step, but will the Federal Reserve actually get super aggressive with inflation in 2022? Personally, I don't think so, and I don't really think it's going to matter even if they do. Because here's the thing, there is a lot of issues across the world, like I said, with Russia and Ukraine and China that are causing a lot of the inflation that we're feeling here in the United States. I mean, gas prices here domestically didn't just go up for no reason. It's because of the Russia-Ukraine conflict. We don't exactly know when that conflict is going to end, and the Federal Reserve raising interest rates in the United States isn't really going to help that issue, because all that does is limit the amount of things that people can buy here at home. They've got to be super careful here, because if they start limiting people even more and inflation still goes up regardless, well, now the buying power of your money is going down and Americans just can't buy anything, which means they're not going to spend their money, which could lead us into a recession. And remember, the federal government and the Federal Reserve are never going to stop printing money. I mean, at this point, I think Burr is probably their favorite sound. So that is never going anywhere. And as they print more money because of bills or debts that they need to pay off, then of course inflation is going to go up, and those monetary problems are never going away. But what this meeting does mean from Jerome Powell is that he is finally acknowledging that inflation is here to stay, and that the Federal Reserve knows that, and they're going to have to get aggressive. What that means to me is that they better put their money where their mouth is. They've said it. They were wrong about inflation, and they promise that they're going to do whatever they can to lower it, but now they better do that. If they don't, well, the Fed and the United States government is going to lose a lot of credibility. And remember, 2023 is an election year, and the Federal Reserve and the President of the United States, Joe Biden, doesn't exactly want to see the economy start to tank while they're trying to get reelected. Meaning they better get serious, because it's their careers that are on the line. So they're going to keep monitoring everything that's happening across the world and in the United States. But the whole point of this video is just to say that the Federal Reserve might start increasing rates even faster than we all thought. Experts and investors on Wall Street believe that now it's pretty 50-50 on what we're going to see at the next Fed meeting. They could raise rates by 25 basis points, or they could go up as high as 50. Remember, at this latest meeting, pretty much everybody in the Federal Reserve voted for one 25 basis point hike at this time. But there was one person that said they wanted a 50 basis point hike, and that was St. Louis Fed President James Bullard. And he might be the only one taking this inflation thing seriously right now. So we're gonna have to wait and see what the next CPI report says when it comes out in April of 2022. That's pretty much gonna influence everything that the Federal Reserve does at this point. The first step to solving a problem is admitting you were wrong, and I'm glad the Federal Reserve has done this at this point, but I certainly hope they're not wrong again. But now I want to hear from you on this issue. What do you think about Jerome Powell saying that the Fed was wrong about inflation and that it is way too high right now? Do you think that the Federal Reserve is actually going to get way more aggressive on inflation in 2022? Or do you think they'll play it nice because they don't want to be the bad guy and potentially tank the economy? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. background, thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.